Once you borrow against your Bitcoin, the next question becomes, what do you do with the money? The goal is simple: generate income without taking unnecessary risk. This is where most people go wrong. They borrow against a volatile asset, then invest into something even more volatile. That's how people get wiped out. A better approach is to pair volatility with stability. Bitcoin provides the upside. Your investments should provide the cash flow. There are a few common options. Dividend stocks, of course, STRC. These are companies that pay you consistently just for holding them. It's one of the simplest forms of income, but for many investors, real estate is where things become more powerful. Real estate is one of the most common ways investors generate income after borrowing against assets. And there are three main ways it creates wealth. Cash flow, principal paydown, and appreciation. You also have tax advantages, tax write-offs. Let's break it down. Cash flow is the money left over each month after all expenses are paid. That includes your mortgage, taxes, insurance, maintenance, HOA fees. If the property produces more than it costs to hold, that's positive cash flow. This income can be used to help cover the interest on your Bitcoin-backed loan. Next, principal paydown. Each month you make a mortgage payment. A portion of the payment goes toward reducing the loan balance, so over time your tenant is effectively paying down your debt. You're building equity without using your own income, and then there's appreciation. Over the long term, real estate tends to increase in value. Not every year, but over time. So now you have three forces working together: monthly income, decreasing debt, and increasing asset value. But there's another layer that many people overlook, and that's taxes or tax write-offs. Real estate has some of the most favorable tax treatment of any asset class. You can often deduct expenses like mortgage, interest, property taxes, maintenance costs, HOA fees, and there's something called depreciation. Even if your property is going up in value, the IRS allows you to treat it as if it's losing value over time. This can reduce your taxable income even while you're generating cash flow. In some cases, investors are able to show little to no taxable income while still collecting real cash each month. This is why real estate is often paired with leverage strategies. But it's important to stay conservative because just like Bitcoin, real estate carries risk. Vacancies, unexpected repairs, market shifts. The goal isn't to overextend, it's to build a system that can survive volatility. And that's really the bigger idea here. You're not just investing, you're stacking systems that work together. Bitcoin grows over time, your assets produce income, and that income can help cover the cost of borrowing or even exceed it. That's when the strategy becomes powerful. But there's one mistake that can break the entire system: that's using too much leverage. Next video, we'll break down the biggest mistake people make when borrowing against Bitcoin. None of this is financial advice.